Hello, welcome to the weekly chart review. I'm Selena Nicholas, technical analyst at XM.com. And today is June 22nd, 2016. We'll look at the New Zealand dollar versus US dollar on the daily chart. It was quite a big move, big rally by the Kiwi dollar in the past couple of weeks. Today the Kiwi is testing some key levels. It breached what was key resistance at 0.7150. Yesterday it just peaked above it. Today we saw a breach of this level again for a move higher. But it remains to be seen if this up move can be sustained, because if we look at our sides, it's approached overbought levels. 70 above this, it's overbought territory. So we need to see a daily closing above 0.7150 to keep this recent bullish bias going, and there would be scope for a move to the next round figure of 0.72, and in the meantime support would be at 0.7050 in the near term. If we look at the Australian dollar on the daily chart, it's been neutral in the short term. The Aussie is peaking above 0.75, and it just broke this level again today. Yesterday as well, it breached it briefly before falling back down. So today it's testing it again, and the 50% Fibonacci level also lies close to this key psychological level of 0.75. So it's an important resistance level that we would need to see a sustained break, a daily closing above it, in order to see a shift from the current neutral outlook to a more bullish one. And there is a possibility of a more upside move since RSI is trending up. Now let's look at the dollar yen, USD JPY on the daily chart. There was quite a consistent downward move in prices since the end of May, and prices broke below key level 105 last week. The market is now consolidating just below this level, so this has now turned to a strong resistance level, the 105 level. But it's shown that by trading sideways in the past few days, the downward momentum seems to have weakened. And we can see RSI as well. It's more or less, it's stopped falling, it's approached oversold levels, and it's pretty much flat right now, which diminishes the odds for further USD JPY weakness. But we need to see a close above the 105 level in order to shift this recent bearish move. If we look now at the pound dollar was more or less neutral before that dip below 1.44 all the way down to 1.40, and then we saw a sharp move back higher, breaking above 1.46 and 1.47. Now we have several tests around this level, and we're seeing prices finding resistance at 1.4770. We'd need to see a daily closing above this level to indicate that the current neutral outlook has shifted to a more bullish one. Otherwise, as long as the 1.44 level, this support, if this holds, then the bias for this pair is still viewed as positive. RSI is still in bullish territory. If we look at Euro USD, it's also neutral in the past couple of weeks. There was a brief spike up a few days ago, breaking 1.1340, but prices quickly fell back down, so this faded the chance of a shift to a more bullish outlook. And then we had break of key support, 1.13, and also the 50% Fibonacci was broken. Although prices rose back higher, we're now testing this 1.13 level again. So we're expecting the pair to trade choppily in the near term within a broad range, 1.13, 1.12 to the downside, and 1.14 to the upside. Thank you very much for watching and have a great day.